First of all, a lot of people aren't good at reading financials like your example people. One thing I say is get regular reports and you will become better and better and better at it. You'll see differences. But who should prepare those, what I like to say is closed, I guess that means something reconciled financials by the 20th of the following month, every freaking month. But who should prepare those?
I would normally say, like, if you don't have the infrastructure where you can have multiple people involved, where, like in my example, they had 2 or 3 accounting clerks, they had a controller, there were plenty of internal controls within the structure. The reason the fraud was able to happen is that the CEO was colluding with the controller. Anytime there's collusion, it's going to break your internal controls. So, that probably sounds hopeless to anybody listening, but, but if you don't have collusion, these things are great safeguards. But if you don't have the financial, for my team, I don't need 3 accounting clerks and a controller, and right, like that's just going to be an administrative it's just an overhead expense is not necessary. So what I would say is if you've got one bookkeeper that's recording things, then you really need an external accountant to run those financial statements. However, here's my caveat on this, is that whenever they go in, they need to have a checklist that they're telling you the things that they've checked. That they're not just going into QuickBooks, running a P&L and a balance sheet, and then sending it to you without making sure things were reconciled. Because I've seen that too. So
what are some things you would put on that checklist?
Is QuickBooks reconciled? Did I verify that the check payees that are in QuickBooks match that on the bank statement, at least for the large ticket items? We had a case one time where this guy had great internal controls. He had a really nice big business, segregation of duties, all the things. And then he had an external accountant who would come in and reconcile the accounts, which is great. These are all great steps. Reconcile the accounts and run his financial statements. Great steps. However, the CFO was writing checks to his spouse, printing those checks, going back into QuickBooks and changing the information on the check so that it didn't show that it was paid to his spouse. So when the bookkeeper came in or the external accountant came in to reconcile, I don't know how many people have reconciled in QuickBooks, but it'll show you the date, the check number, and the amount. It doesn't necessarily show you who was paid and it may show you that now. But if you don't go and actually look at the check image to see is that who was actually paid, then you can be reconciled and still be missing a lot of money. So that's what I would like, have this checklist where the bookkeeper has gone in and checked the large ticket items just to make sure that QuickBooks actually matches what's on the bank statement.
Yeah.
I'm sure a lot of people are going, oh no.
However, but here's what my goal has been, because whenever I first started in this field, especially on my own, every time I got a case, I thought, oh my gosh, I've got to figure out something that's new. And I talk about this a little bit in the beginning of the book, where I had this business coach who said, there's a finite set of problems you're trying to solve every day, Leah. So there's a process that you can create where you're not resolving something every time you get a new engagement. And so this really helped me create now what we have, which is our data sleuth process, to go, oh, you're right. Every case is the same. The story around it is different. And so we created this process. So as I'm telling these stories, it may, like at first glance, it's like, oh my gosh, they could be stealing from anywhere. But they really can't. There's only 2 big areas that someone can steal money from you. And it's as it comes into your business as revenue, or it's as an expenditure as it leaves your business. So we have a lot of trainings on our YouTube channel and podcast and even our blog. We've got some tools on our blogs that talk about how you can evaluate the risk of fraud in those 2 areas. As I'm receiving money coming into my business, and then money leaving my business. And then how do I just check those things to see if that's happening? If you go to the ACFE's website, and I'm a CFE and I love the ACFE. I spoke at their conference a couple weeks ago. But they have all these different schemes that could happen, and that seems overwhelming. But really at the end of the day, where do your people have access to cash? And if they were going to, and I'm not talking about like
cashing it,
actual
at
cash.
greenbacks.
Yeah. It's any type of, money that's coming into business. So credit cards, whatever, checks. Where do your people touch those things? And if they were to steal, where would they steal? And then how would you know? What do you have that would tell you, oh, this is why this is wrong? So I break that down further in the book, and I also break it down further in a blog post about fraud, like fraud detection and how you can do that. But so I really try to come at this. I mean, the stories are what's interesting, but the stories can also be overwhelming to somebody who thinks, oh my gosh, I may have a problem. But I really try to simplify it down to even if somebody's stealing money, you can find it.
What I'd like to accomplish with the stories is not to frighten people away so they just throw their hands up, but that it is very real. It can happen. It can happen. Your best buddy can be the one that's sticking it to you, and that there are some things that you can do and should do, must do, to at least, it's like soft or internet security. There is no such thing, but there's a lot you can do to reduce the risk. And I had the lady that sold from us, well, I had a neighbor, let's start out with, across the street, had a nice business. He was 85 years old, sharp as a tack. And he told me one day, I fired so-and-so. Why? Caught her stealing from you. Really? What'd she do? She created a little company that was similar sounding to hers. She would collect small accounts receivable payments, put them in her bank, and delete the receivable. I said, well, that's all traceable. I go, well, it should be if you have the audit feature on and all that. Who's tracing it? He only caught her because she called up, a customer called up about something on, and he looked for it, it wasn't there. And of course he didn't, as we talked a little earlier, he didn't do anything about it. He just fired her. She was a loyal employee all those years. The gal who stole from me, we had a lot of Chase credit cards, and we paid them off several times during the month, right? She had a Chase credit card, just paid hers right along with ours. And then in a very sophisticated deal, or relatively so, she took the expense and posted it in the prior year, so I wouldn't notice it in the P&L. Well, that throws off your beginning balance. So in December, she went back and went to all those dates and reversed those entries and scattered them throughout the year so they didn't show up.
Oh my.
Or didn't glow, let's say. And that also was her downfall because she had written notes to know where to look. And when I had the IRS in Oklahoma City detectives came in, there it was. I mean, she didn't fight. She went to jail, and we got our money back. But I love those kinds of stories because that's how somebody did it.